Hi, Scott Nelson, Senior Wealth Manager with Boulay Financial Advisors with your mid-quarter market and economic update. We start as we have for the past several quarters by looking at inflation and interest rates. After a steady year-long decline in inflation, we saw it bump up about 0.5% during the summer months. The Consumer Price Index reading in October, though, reversed course, once more falling about 0.5% to an annual inflation rate of 3.2%. The primary factors for the decline was a decline in energy prices and a slowing of the growth rate of housing prices. Fed Chairman Powell reiterated in early November that while the Fed is committed to getting inflation down to around 2%, it'll likely be a gradual process. After raising the federal funds interest rate 11 times between March of 2022 and July of 23, the Fed now appears to be holding off on further hikes to see how the economy reacts to one of the fastest series of hikes on record. One sector that has definitely felt the interest rate hikes is housing. Existing home sales dropped to levels last seen in 2010 as the average 30-year mortgage rate hit a 20-year high of 7.63% in October. Looking at the U.S. economy and employment situation, the economy grew an impressive 4.9% on an annual basis in the third quarter due to a combination of strong consumer spending and businesses spending to restock shelves. Higher capital investment by businesses, as well as increased government spending, also contributed. Economists see the jump in growth rate as an exception and expect the fourth quarter GDP growth rate to return to levels more in line with what we've seen over the past several quarters. After spending 17 months between 3.4% and 3.7%, the unemployment rate has inched up slightly in the past couple months to 3.9%. Now, despite the uptick in the employment rate, the job market remains very tight. As the chart shows, since June of 2021, the number of job openings has exceeded the number of job seekers. In September, there were an estimated 3 million more job openings than there were people actively looking for a job. Now, looking at the stock and bond markets. The Federal Reserve's pause in rate hikes and the continued strong economy has been good news for the stock market. The market is off to a strong start in the fourth quarter, up over 6% and now up over nearly 20% for the year, per the Morningstar U.S. Market Index. Growth stocks have also recovered from their summer doldrums and are now up 6.8% for the quarter. International stocks are also experiencing a good quarter, up 3.9% per the Morningstar Global Markets Index that excludes the U.S. As they have all year, developed country stocks markets continue to outperform those of emerging country markets. The bond market participants were optimistic that the Federal Reserve's pause in raising interest rates would actually become permanent. Overall, the bond market is up 1.6% for the quarter and 0.4% for the year as measured by the Morningstar Core Bond Index. Strong economy led to returns of over 2% for both investment grade and high-yield corporate bonds in the fourth quarter. That is your update for the fourth quarter of 2023. As always, if you have any questions about the topics covered, reach out to your Boulay Financial Advisor. And to learn more about Boulay, please check out our website or email us at learnmore@boulaygroup.com. Until next time, I hope you have a wondrous holiday season.